Good morning, traders, and welcome to our live analysis today on the date 10 of September. And as usual, I'm going to take you through our analysis, our premium analysis on the major pairs and gold. And this is just an explanation of what the premium PDF entails and what we're looking at on these pairs today. So let's start with the Great British Pound against the US dollar. The time frame is 4 hours. And from yesterday, we were expecting this breakout and taking the buy position. And so far it has moved. So just a moment. Sorry. Yeah, so we have the right back. So far this pair has moved from the breakout around 62 pips. We're still in, and our projection is that with 3 will touch at least 1.40. So that becomes our target for the buy position in GBPUSD. So if you're trading this pair, your focus should be holding this pair all the way to at least the end of 3, 161.8% fib. And it is very likely that this pair will extend because wave 2 did not touch 61.8%. Instead, it reversed from 50.0%. So it is very likely that this pair will extend. And so today, our stops will be moved to the end of 2, as this wave 3 has already started moving, and of course the minor waves have progressed, and they cannot come back beyond 2 unless of course wave 2 becomes a complex correction. So we're moving stops to the end of wave 2. So this is the new update today. Our traders will be moving stop losses from the initial place to this new invalidation level. So we can just have a note that we should move stops here. So stops here. And you can see that the impulse is quite strong. So if it goes beyond the top of 1, then it's very, very likely to touch 61.8%. And then of course we will expect wave 4 once wave 3 completes. So that is it on GBPUSD. And the next pair on our watch list is AUDUSD. And of course, we have been buying this pair as well. And today, our wave 4 has completed, and now we're looking to buy wave 5. So already some traders took positions, the buy positions yesterday, and are still holding. But of course, the stop loss was quite small. So the risk was really, really small. And we're projecting that we will have a breakout on this trend line, either as wave 3 or as wave 5, although wave 3 is likely. So for now, there is no specific target, but this trend line is one of the targets. Once price touches here, we should be exiting the buy position. So today, our projection is we expect the market to at least break out from this trend line, and then we can see the market push higher to complete wave 5 and hence complete a major wave 3. The stop loss is at the top of 1 because we're trading minor 5, and minor 4 cannot go beyond this top of wave 1. So once it completes 3 and we have 4, when we're trading wave 5, our stops will be at the major 1. So that is it on AUDUSD. The next pair that we have is NZDUSD, and of course they are positively correlated. So this is also bullish, and we had a breakout on this trend line, but the retest came back in as wave 4. Before it traced up to 38.2%, it completed exactly there, and the invalidation level is at the top of 1. So we're taking these buy positions, targeting wave 5, and there are many ways to target wave 5. One of the ways is wave 5 moves at least 61.8% of the whole move from the start to the end of 3, and that's how we will project our wave 5 this time. So from the bottom all the way to the end of 3, and then So just precise, the start is here. So you set the 100 at start and then 0 at the end of 3. And then the ratio you're looking for is 61.8. So you grab the tool 61.8, put it at the end of 4, which is there. And then our 5 is now projected to end at least at this level. So in that case, we'll just update the stop losses. So we will move stops to this level here at the end of 4. So, so we'll move this to the end of 4. Unless, of course, wave 4 becomes complex, but it's less likely at this point. So we will move stops here. So, and this is the importance of updating charts every day, because you get to update your stop loss levels, the invalidation levels. You get to see what you expect in this pair in the coming days. And then, of course, you can easily set targets once the impulse or the correction has ended. So today, this is the minor target. So, of course, we are bullish long term, but if you're trading intraday setups, then this is the minor target. This is where you should place your target. So if you took the buy position yesterday after the breakouts, then you should be you should be running around 20 pips, but the target is at least 183.5 pips, which is good. And then the stop, of course, is still low. So if you're taking a buy position now, your stop loss should be here. It should be at the new invalidation level. So the next pair that we're looking at is EURUSD. So like I said last week, all these pairs were trading on wave 4, and clearly most of them or all of them have completed wave 4, and now we're looking to trade wave 5. So for in this case, of course, using the fib ratios, we saw price bounce back from 50.0, and it also touched the channel, and so it's no longer necessary, but so I can delete them. So we have this channel which is almost breaking out, and this is a bullish flag. So once we get a breakout, it is very clear that we are bullish, and we'll see wave 5 play out as expected. And then to target wave 5, we can project from the same way we did on the other pair. So this is how you project it. So this wave 5 moves at least 61.8% off wave 3. So your minor target should at least be here. So of course it's likely to extend, but if you're trading intraday, then your minor target should be at this level. Now, of course, this could be a very good entry for the long-term buy position. So if you're a bit patient, you can take a buy and wait long-term. But if you're not, then you can book profits after this wave 5, the minor wave 5. So once we get a breakout, it's good to buy. And then the invalidation level will remain here for some time until we get that breakout and at least surpass B. And then we can move from the top of 1 to end of 4. So that is it on EURUSD. The next pair that we're looking at is, of course, this pair USDCHF, which has gotten you maybe worried sometimes because of this a very big consolidation that has taken place for quite some time. Should be, I think it's taken more than from August 17 to today, but clearly now we can see some hope in the bearish move. So this is a bearish flag on a smaller time frame, which you should be looking to short. And of course, this pair has not yet taken out the invalidation level, the major invalidation level. This was the invalidation level, major invalidation level. So if this pair moved beyond this level, then we would have changed our view to probably a bullish view, or the possibility that C has not completed. So today we're looking at the possibility of this pair breaking out from this trend line and breaking out from this other trend line. So if you're taking the sell positions, then you can place your stop loss at the end of wave C and Y. So this should be your invalidation level if you're taking that sell position. For the target, you can maybe take part of the profits when you touch this trend line after this breakout. So we'll break out here and then have a breakout on this trend line, and then a retest. So you could take part of the profits here as you wait for the retest, and then we can take short positions long term. Because as you remember from the long term analysis, we are bearish long term on USDCHF, US dollar, Swiss franc. So for USDCAD is the Canadian dollar. This is an interesting pair to trade, as long as you can be patient and of course bear with the reversals at any time, the complex corrections. But as of today, we have a clear wave Y, and we also have a clear end of wave X. So we will use a channel to project the end of wave Y. So the channel should start from the end of wave 5 here, and then touching X, and then the next trend line will be on W. And so our target is on this channel. So clearly it also coincides with 61.8. So this pair will maybe have an impulse until this level, and then a corrective move, and then we could see it touch 61.8%. So if you're going to sell it, you should have taken the sell from the sell zone. If not, then wait for a bearish flag so you can take a short position. This is the view. So after this correction, we will look to buy long term. So if you're trading this, of course, you can take a sell, but short term, have the stop loss here at the top of X, so around this price. So that is it on USDCAD, USD Canadian dollar. For USD yen, this is a bit complicated, and I would like to update it so you can have a good view of it. So currently, from my point of view, it is very likely that this is a flat. So from the top to C. And then, so the best thing to do when analyzing any pair is first identify the market structures. So from what we see now, there is a possibility that this is a flat and actually looks like a flat. So the thing with corrections is you can only be sure once the market has moved beyond the correction. That's when you can be very sure that this was a flat, this was maybe a zigzag, and so on. So today, if this turns out to be a flat, then it is very likely that this pair will stick to the bullish move instead of the bearish move. So I would advise that we become patient and wait to see how this pair will play out. Let us not take any buy positions or sell positions, because it is likely that this could be a wave 1 and this could be a wave 2, and then we could have bullish moves. But as of now, the bullish move is stronger. So if you have any sell positions, you should be looking to close. So the reason why I say that is, if you look at the long-term analysis, this pair we're expecting bullish moves in the long term. So we're expecting bullish moves, and it's very likely that. Okay, so let me just change to a bigger time frame so I can show you what I'm trying to explain. So we could have instead of this WXY, we could have a wave 4. Wave 4 ending here. So we could have this wave 4 here. And I think this is a very possible move. So if we can have wave 4 here, so just change that to a bold line. Yeah. So we could have wave 4 ending here, and instead we could start seeing impulses. So this could be major 1, major 2, major 3, major 4, and major 5. And major 5, of course, will start the target. So major 5 completing another 5. So if this happens, then this won't be a wave ABC. It will be a minor wave 1 as a leading diagonal, minor wave 2 as a flat, and then minor 3 and 4 and 5. So we'll change that to sub-micro, because they're smaller waves of wave 3. Then we'll see a major wave 4. So if this happens, then we're looking to buy wave 3. So I'll just use the path. So 4 and 5. So if this happens, then we will see USD JPY moving in a sequence of 5 waves. So on the 4-hour time frame, we can clearly see that this is a very possible move. It's a very possible move. And of course, this some of you might think this is a correction, but it is a leading diagonal. So okay, so yeah. So a flat on wave 2, a leading diagonal on wave 1. So it is likely that we are starting wave 3. But for now, I suggest we don't take the trade yet, as we wait to see what will happen on this pair. So if you get a bullish flag after wave 2, so if price goes beyond this top, then we get a bullish flag, then it will be very clear that we're bullish on this pair. Until then, let's just be patient and wait for the market to give us direction. So only price can decide. Only price can decide. Yeah, so that is our view on USD yen. And in any case, if we get to take a buy, and of course might be high risk, then our invalidation level will be at the bottom of 2, because this wave 1 here, wave 2 cannot go beyond the start of wave 1. And this is the start of this wave 1. So we will set stops here. So the invalidation level. So we normally set stops on the invalidation level. So that means the price that if the setup goes beyond, then it becomes invalid. So the analysis becomes invalid if price goes beyond wave 3, and that is when we start recounting and seeing maybe where we went wrong, or if the correction goes deeper and such things. So if this happens and you're willing to take that risk to trade wave 3, then you could take the buy positions if you're very sure that this is a flat, and I think it is. So if you take a buy here, set your invalidation level here, and you can set a target for F3, which is likely to extend. You could put it at a round figure like 112.00, and it is likely to be achieved. So the next pair on the watch list should be the DXY, so the dollar index currency. So the dollar currency index, sorry. And we've been following this pair for some time together, this index, sorry, and I've been telling you that this index is used to measure the weight of the US dollar. So all the way from when we had this ending diagonal, we've been following it, and we've one major wave 1 completed. This is the major 2 that has completed, and so we're now bearish. And what that means on the pairs that it affects, or the pairs that it weighs, it means that the US dollar is getting weaker compared to the other pairs. And that's why you see bullish views on EURUSD, bearish views on USDCHF. So this wave 2 is completed at exactly 50.0, and we can see that we have bearish moves currently in play. So this means that we have a weakness in USD. So this will help you profit when trading USD pairs. So if USD is weak, you know what to do with the other pairs. So that is it for this pair, the index. So we can have a trend line here. Once we get a breakout, then it's very sure that the bearish move has commenced. Now the next pair that we're looking at is gold. So of course, you remember this move. We took the buy positions. I suggested we close here. We've had completed, and today we're just looking at wave B still playing out, and a channel is possible, but of course not the right thing to do here. So we will use a trend line instead, so that we can give room to this pair to play out here. And once we get a breakout, it would be the wave C of wave B. So we are still not in this pair. We're not trading this pair now, as we're waiting for this correction to complete. But once we have wave C, so this will be A, and then B, then C. So once wave B, the major wave B completes, so I'll just change that to a larger degree, micro. So if we have a complete 3-wave sequence, then we can look to now buy long term to complete wave C and the regular flat that we have been talking about. So this is what we're looking at in this pair. And I think most traders are interested in trading gold. So if you're trading gold, I suggest you wait for this wave B to complete before you can look to take your buy positions to this level, which is probably around 910, between 910 and 1920 and 1910. And that is it on our analysis. That is it on the long-term analysis and the short-term analysis. And most of these pairs are intraday trades that you can catch maybe 100 pips, 200 pips, and so on. And they can help you find good entries for the long-term trades. So that is it on our analysis today. Thank you for joining me and have a good trading day. See you again tomorrow, same time for the live analysis.